Crypto is front and center on Capitol Hill, and here comes the volatility. Hey guys, it's Keith Howens. So much going on right now with macro fundamental implications that we're going to climb into. Obviously, a lot of speculation going on as well. So we got to look at all these factors, kind of help them build the narrative. We also have to look at the charts. Because you know what? Charts don't lie. So we're gonna look at these, in broad strokes. We're gonna look at these events that are happening individually, see how they may impact the overall macro narrative, if you will, and then look at the charts and see what's happening because, well, things aren't always as they seem. So without further ado, let's just go ahead and climb in, and I will share a chart with you. Music starting up again. We're done with that. Let's get out of that and get into this. We are going to start with fire charts because, actually, you know what? I guess we should start with what is actually happening in the news, right? That's the bigger deal, and then we'll look at how liquidity is moving around in the order book and some of the clues that we have of what might be the short term, how things are going to play out in the short term. Because some of these events, they may end up being buy the rumor, sell the news events, but have, I think, at least in my opinion, a longer lasting macro bullish impact on the overall market that may actually trickle into the global ecosystem. So let's go ahead and share a few things that I think you guys are going to find interesting. A lot of news going on this week. If you haven't been in tune to it, that we have had some significant legislation making it to the U.S. House of Representatives. That news, obviously, pretty big yesterday as the Fit 21 bill cleared the House handily, too, by the way, with bipartisan support. So that was a big deal. And if you're not familiar with what that bill is all about, I did share a few things on the Black Knox page about it, but you can, I encourage you to do your own research on this. And I'm not saying that this bill is absolutely perfect because it's not. And I'm not saying that this is a slam dunk because it's not, because it has to go, for those not familiar with the U.S. political system. And I wouldn't fault you for that because it's a freaking mess, but something that is structurally sound and has been for hundreds of years. Sounds pretty young, but we're a pretty young nation, all things considered, is that for a bill to have to become a law, it has to go first past the House, then it has to pass the Senate, then it has to be signed off by the president. So this is obviously the big news that this was passed yesterday. It is, for those not familiar, it's the Financial Innovation Technology for the 21st Century bill, hence the acronym FIT 21. And this really creates a regulatory framework for the U.S. government and the entire crypto, Bitcoin, crypto digital asset ecosystem. That includes innovators creating tokens and blockchains. It includes exchanges. It includes investors. And I think that a lot of big money, I'm talking big major institutional money, has been sidelined for a long, long time, waiting for regulatory clarity before they jump into the crypto market. And so I do think that the long-term impact of this could be, if it does make it through the Senate and make it past the president's desk and passed into laws, then we really have the makings for a massive wave of adoption, just in terms of investment vehicles. So that's very, very important. Another key component of this bill is it is going to take away, Gary Gensler and the SEC have been really enjoying exclusive jurisdiction over this industry here in the U.S. as it relates to the U.S. And it stands reasonable to think that the rest of the world that has not yet defined their crypto legislation might be taking some cues from some of the things that are in this bill. Certainly not all of them, and certainly not all of them are necessarily good. However, it's a big step forward, and that's a much needed step forward that the industry has been asking for. This isn't a call for overregulation. It is a call clarity, for clarity and definition and what can and cannot be done, what the laws are, and that gives everybody some comfort and protection. So that's where that is at the moment. Now, to add some context to this, earlier in the week, Trump declared that he would accept donations in Bitcoin and any other crypto that could be transferred through the Coinbase commerce system. So that obviously showed at least his intent for adoption. I'm not going to get into the politics of whether you can trust anything that comes out of that guy's mouth, but it helps him to platform crypto and to take donations any way that he can get them. So with that, interestingly, we not only see bipartisan support on this Fit 21 bill, as 71 Democrats voted yes on it, along with 208 Republicans. Only three Republicans said no, and 6 didn't vote. Excuse me. But so it was a 279 to 136 vote, overwhelmingly majority won. And now this has to go to Senate, which there's not really a defined timeline for that to happen. I don't even think that there's a companion bill yet for the Senate. So we have to wait for that to happen. And then, of course, they have to get through their debates and their vote on that before it goes to the president. Now, President Biden has had a not so positive view of this bill in the past, and he's been vocal about saying that he didn't like it and that he would likely veto it. However, in the past less than 24 hours, the White House has indicated that President Biden said that he's looking forward to. Well, a couple days ago, he said he's looking forward to working with Congress to get to good legislation. And he did say, yesterday they put out a statement that said if it passes in the Senate, then the president would sign off on the bill, and that would turn it into law. So that would be, that's obviously going to take weeks or months to happen, if it happens, obviously. But that's positive, a positive step in the right direction for the market. That was a mouthful. Now, what else is going on? What's the big news that was overshadowing everything before this really became top of mind? Also, just while we're on the topic of Congress, there's also been, I saw an article earlier this week that they're going to put some legislation out to vote to knock down a U.S. CBDC, central bank issued digital currency. Nobody really wants that, as far as I know. So I think that would get bipartisan support if it gets to the vote. So that would also be positive for the industry, more positive, I think, for citizens. Nonetheless, that's an important piece of legislation that could make it to the floor as well. But the ETF, right? Spot ETH ETFs have been all the rage here. Lots of talk and speculation about what's happening with the Spot ETF. And the question is, did the market speculate and push ETH too far, too fast? And is this going to be a buy the rumor, sell the news event? Well, we're obviously seeing some volatility here. Again, I have on the Black Knox page on the X platform, I do have an article related to this that you might find interesting from Morningstar that kind of explains some of the dynamics between the ETH ETF and the Bitcoin ETF. Obviously, ETH is much, much smaller than Bitcoin. So there's no expectation that we're going to see the same amount of volume that we saw on the Bitcoin ETFs. Also, a notable dynamic, and I apologize, I'm not super well versed on this, but I do know that there are some very different factors with that were surrounding the Bitcoin spot ETFs versus the ETH ETF. Number one, it was over 10 years of pent up demand since the first application went in for a Bitcoin ETF. Secondly, and this is the most important part, is Grayscale had, prior to the ETF being announced, they had a trust. It was the Grayscale Bitcoin Trust, symbol GBTC. after the FTX crash, and I do realize that they also have an ETH product, but the difference, or at least one that I haven't had clarity on yet, the difference is the Grayscale's Bitcoin product, the GBTC, prior to being converted to an ETF, was an asset that was initially sold over the counter. And after the FTX crash and Grayscale and their parent company found themselves in a cash crunch, they were not allowing people to sell those holdings. And they basically locked it up for, I think, 2 years, right? From the FTX crash to the time of the ETF approval. FTX crashed in November of 2022. ETF was approved in January of 2024. And obviously, there was a lot of pent up demand to get out because prices had appreciated, obviously, in that amount of time as well, right? So as soon as that thing hit the market, it converted to an ETF. And of course, it's well known that Grayscale had a pretty high fee on that. And there was a mass exodus. I mean, billions of dollars, mass exodus. It was like, in the beginning, I think it was something like 600 million a day was outflows from just Grayscale, something in that range. Whatever the case was, it crashed the market, or at least dumped it significantly to a deep correction before climbing out and finding its footing. So what I don't know for sure is whether their ETH product is going to also convert, or if this is going to be a separate product. I haven't been able to find any clarity on that at the moment, but I think it's a different situation. Even if it is converting, these people haven't been in a lockup period for 2 years, right? People with the ETH product, I don't believe have had their products locked up. Now, if anybody listening has any insight to that, please pop a comment in. I'd love to hear, gain some more insight on that. So those are obviously big issues happening around the overall market that could be good, regardless of whether this ETF gets approved this week or not. And there's obviously a series of them, according to this article. I think one has a deadline approval of today. Another one has a deadline approval of tomorrow. I think all of them should be done by tomorrow. Unless, of course, the SEC finds another reason to kick the can down the road. But I'd been speculating on whether or not they were trying to fast track this thing because of this Fit 21 bill. So that all remains to be seen. Nonetheless, we're going to watch and see what's happening. So in terms of ETF flows this week, obviously been pretty positive for the last, let's see, 1, 2, 3, 4, 5, 6, 7, 8 trading days. Remember, they don't trade on weekends. And big couple of days here for BlackRock. A little bit of outflow yesterday for Grayscale, but nonetheless a net positive day overall for the whole lot of them. And that's something that I expect to continue, especially as we see price dips like we're looking at right now. So I know you guys are going, okay, get to the charts, please get to the charts. So let's do that. And you can see price is dumping now. I had told you guys every time we talk about this 2021 top at 69K, I told you guys every time if we see a wick come through here, then that's going to be a sign of weakness. And look, this is exactly what happened here. Let me expand. I know some of you guys hate fat candles. I'm just showing this so that we can see it on the chart. Yesterday, we saw a wick below down to 68, 900-ish. And today we see further breakdown. So despite the news, right, that is, ultimately bullish, we haven't seen that RS flip here yet. Now, let's go back and rewind. If you followed the live stream here earlier this week, we talked about this measured move on this falling wedge. Falling wedge is an inherently bullish pattern. We took a measured move from the top of this wedge to the bottom. And then we move it to the breakout period, to the breakout range, right? We broke out here. So that puts us at just above 73K, which means if this plays out, that we could conceivably see a run up to 73K. Looked like we were moving in that direction. Things topped out at just below 72K. So we could conceivably go back and revisit this. Obviously, want to stay out of this structure. If it falls back into that structure, then we would be invalidating. Nonetheless, at the moment, we're seeing a pullback, and my pullback targets. I'd look at initially these technical targets here. These moving averages, we have the red 50-day moving average, the green 21 moving average, and the 100 and the blue 100-day moving average are all really clustered in a pretty tight range from 65K down to 64K. And that's moved up, right? Just the other day, it was down in the 63s. So it is conceivable that we do go back up here. Those shorts got squeezed, and now the longs are getting punished. And that really is the game here, in my opinion. So we had talked about this. Now I want to show you something else that appeared in the order book that I found very, very interesting. So we go over to fire charts now, and you can see here that we did see. Obviously, we talked about this too, right? Yesterday we talked about these blocks of liquidity that came in on the upside, ask liquidity well out of the range. But anytime this happens, it seems to, I don't know if it's triggering algos or what the deal is, but it seems to trigger some pressure down on the market. And if it came from this side, it would do the opposite, right? So this moved into the 75, 76K range. And then, and then yesterday it dropped down into a ladder here, which applied more downward pressure, which made me think, okay, things are not going to hold here at this 69K. They hovered there for a little while, and then this morning, obviously, things breaking down. So we saw this morning. Oh, I need a refresh here, guys. Sorry. And my internet is slow today. It's been slow this week. I don't know what's going on here, but it has been super slow. I've been streaming videos, like when I'm working at night, and it's been super, super slow and pixelated. Okay, there it is. So while we're still here on this weekly chart, I want to show you something that I noticed last night. You see this ladder down here and here. So this was, conceivably one entity with a ladder here and a ladder here, and they disappeared. Where did these bids go? They didn't turn into market orders. They're gone. And so that to me was a signal that we could see more downside. Now, today we saw some stair stepping of bids. Right? First it appeared here, then it moved down. I was like, don't trust this. Do not trust this. And lo and behold, what's it doing? It's breaking loose, and it is leading the way down. So now we have another block of liquidity coming into the 66K level. And I'll be honest with you, I don't trust when new liquidity appears like this, and especially when it starts moving so aggressively, I don't trust it. Nor should you. I wait for clear signs of buying and not fake outs. Looks like they did bounce here briefly, but obviously started selling again. So I'm not confident that this holds. And the reason I'm not confident that this holds is because we want to look at the technical targets. The technical targets put us where? Closer to 65 than they do at 66. So or even 67. So I don't think we're done yet in terms of where things could go. I could be wrong. I'm wrong plenty of times, but I think it would be hasty to rush into a long from here until we see some clarity of where the real buying volume begins. So let's zoom out a little bit and see if we can look lower and see if anything is moving down below. 60K still remains the area with the deepest pocket of liquidity. There is, and there's not a lot. It's a little over 15 million right there. Meanwhile, we got a double stack of we'll call it 9. So, this is basically another 15, 16 million of liquidity here, double stacked here at the 63 range. So that might slow things down. 65 could hold, 66 could hold, but until we see real volume happening here, right? They started and then they stopped. They started selling again. So I don't have confidence that this is that we've bottomed here yet. That's basically what I'm watching. With that, I think we have. I guess we could take a quick look over at ETH because hey, why not? ETH also has a bit of a pullback, right? We're pending approval here today. We're on the daily candle. This did make it up to what 39 39.50 today, and still now we're seeing a bit of a retreat. Um, Moving averages are coming up close to this 0.618. Yesterday, I said that this would be a great target if we got a retest here to the 0.618 fib. This is a fib retracement from the all-time high. By the way, it's from the all-time high down to the low that kicked off this run here. If we were to get a retest of support here, in my opinion, this would be a very, very strong sign. Okay, especially if when that happens, we have interaction with these key moving averages somewhere around here. We're pretty close right now. Things are moving up, but unless that happens today, and it could, right? We had this. This was a 20% candle. This was another 3.5%. So it's okay to give some stuff back, right? And even if it came to here, that would still be a net positive, and it would be a higher low, and would be a good foundation to validate an RS flip and start building that next leg up. Will it happen? Will we get it all the way there? I don't know, but at the moment, you can see momentum on the A1 slope line still indicating some downward, some weakness. So not convinced that we hold here. Let's see if I can pull up a quick ETH chart here for you guys as well. Well, we're at it, and we'll wrap it on that. So here you can see the pressure overhead is pretty heavy, and not a lot below. Right, these big blocks really overshadow what's happening with the rest of the order book, because you get these bigger concentrations and everything else looks very thin relative to that. So not seeing a ton of support at the moment. It looks like that 3,700 range could potentially hold, but I would not be surprised if we see more of a breakdown, especially considering that we're seeing some rolling off of the top here, some sell pressure here. So purple whales are the ones I watch the most. I don't study ETH nearly as much as I study the Bitcoin charts, so I'm not great at forecasting this, but just in terms of what I'm doing, I'm in a position that I've been in for a while. That's been underwater. I think that the adoption of an ETH ETF eventually will yield positive results. Might mean we have a short-term sell-off before we get into the upside of that, but I'm willing to ride that out for a little bit. So in terms of adding to that position, I'm waiting to see if we get a move lower. Like I said, I'd like to see it pulling back into this range. Would just be epic, in my opinion. That's a long way from here for ETH. That's a big move, but it's certainly not out of the realm of possibilities. Let's see what that would be from here. That would be an 11% move to get back down there. Coming off of this move, coming off of a move that took us to literally 30%, 29%. If I'm going to be literal, I guess I should be literal. 29% in just a few days. Giving back 11% is not a big deal at all, in my opinion. So unless, of course, you're over leveraged and you're getting punished, then it's a big deal for you, I guess. Well, that's what I'm looking at, guys. I hope that helps you out and gives you some things to consider as you try and navigate through the week. We do have, obviously, a holiday weekend coming up here in the U.S. It's Memorial Day weekend. And of course, we tip our hats to all who have served our country. And Material Indicators is going to crank out a sale here for the weekend too. So be alert to that. If you like the content, please do me a favor and smash all the buttons, share a comment. I love the comments and I engage with each and every one of them. And I really appreciate the shares and the support that you guys have been showing me. So please keep that up and help me grow the channel. Thanks you. I appreciate it wholeheartedly. With that, we're going to wrap it, guys. As always, trade safe and have a fantastic day.